In the vast realm of global finance, where trillions of dollars crisscross the world each day, a subtle yet monumental shift is taking place. China, the economic powerhouse of the East, is strategically reducing its dependency on the US dollar, USD, and promoting its own currency, the yuan, CNY, or RMB, on the international stage. With foreign currency reserves approaching a staggering $3.2 trillion, China's gradual approach is quietly challenging the supremacy of the US dollar as the world's reserve currency. For decades, the US dollar has reigned as the world's primary reserve currency, the proverbial kingpin in international trade and finance. This status afforded the United States unique privileges, including the ability to run persistent trade deficits and accumulate massive debt without causing an economic crisis. However, with China's rise as an economic superpower, it has become increasingly apparent that a single currency should not hold such extraordinary sway over the global economy. China's careful maneuvering seeks to introduce a more balanced financial landscape, while avoiding an abrupt shock to the global economic system. One of China's key strategies in this quest is to reduce its reliance on the US dollar by diversifying its foreign exchange reserves. Historically, China held a significant portion of its reserves in US dollar-denominated assets, like Treasury bonds. However, in recent years, it has begun to diversify its holdings into other currencies, such as the euro, Japanese yen, and British pound, as well as commodities like gold. This deliberate shift not only protects China from potential USD depreciation, but also reduces the United States' leverage over its largest creditor. To further bolster the yuan's international presence, China has engaged in numerous currency swap agreements with other countries and central banks. These agreements allow for the exchange of one currency for another at a predetermined exchange rate, effectively reducing the reliance on the US dollar as an intermediary currency. These swaps not only facilitate trade and investment, but also strengthen China's political and economic ties with its partners. The more countries transact directly in yuan, the more its international status grows. In addition to currency swaps, China has embarked on an ambitious journey to encourage the use of the yuan in global transactions. It has established offshore yuan centers in major financial hubs, like Hong Kong and London, making it easier for businesses and financial institutions worldwide to hold, trade, and settle transactions in yuan. Furthermore, China has established the Cross-Border Interbank Payment System, CIPS, a clearing and settlement platform that facilitates yuan transactions outside mainland China. By building this infrastructure, China is creating a pathway for the yuan to become a global currency of choice. Stabilizing the value of the yuan is another crucial aspect of China's strategy. A stable currency instills confidence in international investors and trade partners. To this end, China has taken steps to manage the exchange rate of the yuan, preventing abrupt fluctuations that could disrupt global trade. While this has drawn criticism from some who accuse China of currency manipulation, it reflects China's commitment to a gradual and controlled transition rather than a sudden shock to the international financial system. China's approach is not without challenges and risks. It must carefully balance the internationalization of the yuan with domestic economic stability. A sudden rush to the yuan could lead to capital flight or speculative bubbles. Therefore, China's leaders are proceeding cautiously, with their eyes on the long-term goal of yuan internationalization, while ensuring domestic economic resilience. The implications of China's currency ambitions extend far beyond the world of finance. This quiet revolution symbolizes a broader power shift in the global order. As the yuan gains prominence, it boosts China's soft power and enhances its influence on global institutions. The Chinese government's Belt and Road Initiative is a prime example of how yuan internationalization goes hand in hand with Beijing's geopolitical goals. It allows China to extend its economic and political reach across continents and cement its role as a leading global player. For the United States, China's move poses both challenges and opportunities. While the gradual shift away from the dollar reduces its unique privileges, it also encourages the United States to address structural issues in its economy, such as its fiscal deficit and trade imbalances. This shift may motivate the United States to invest more in infrastructure, innovation, and education, ensuring its continued economic competitiveness. China's strategic reduction of its US dollar holdings and its active promotion of the yuan on the international stage represent a quiet but profound transformation in the global financial landscape. As China's influence grows, so does the allure of the yuan as an international currency. The transition is not without complexities and challenges. but it reflects a world in which the economic order is gradually evolving. China's approach seeks to prevent a sudden economic crisis in the United States while underscoring its increasing global influence. The future balance of power in the world of finance may be quietly but decisively tilting in favor of the yuan.